Good afternoon, everyone. Thank you for joining us today for our automotive dealership response to the COVID-19 crisis with question and answer session. Just want to preface before we get started today that if you have any questions during the presentation, please use the chat feature. You can either submit that question to me, Tara, the moderator, or publicly to the group, and we will address those questions as we can. Thank you. Today's webinar is brought to you by Rosenfield and Company. We've got Scott Lewis on the line from Rosenfield. We also have Michael Charapp, Brad Weiss, and Kimberly Macumbee from Charapp and Weiss. And with that, I am going to turn this over to them to get started with today's presentation.
Thank you, Tara. This is Mike Charapp. Can you advance the slide? And again, we appreciate everyone joining us. What we're trying to do with this webinar is to acquaint you with some of the legal ramifications of some of the operating issues you may find. The resources are out there to have information from a lot of sources on the federal response, whether it's the CARES Act or the Family First Act, especially the very excellent webinars that took place Wednesday, yesterday, and today from NADA. However, there are practical issues we know that you're dealing with and that you need to know how to address, and also you want to pose some questions. And so we're going to quickly go through some prepared topics, and then we're going to ask if you have it, and then we're going to try and cover any questions. We're going to rely on Tara to go through the questions as they come in and read them to us, and we will and direct them to us for answer. So let me first start on the issue of franchisor relations. There's nothing more important than your relationship with your franchisor and maintaining it throughout this situation. Now, you should be aware that your dealer sales and service agreement does require you to remain open. And we have seen letters from several franchisors, particularly Nissan, noting that you must, if you make the choice to close, they will be considered on a case-by-case basis as to whether you've breached your dealer agreement. Now, frankly, there are circumstances in which you're not going to have much choice, perhaps, depending on your location. And so if you're mandated to close your sales department, for example, in some locations, the franchisor is going to be in no position to challenge that. If you make the voluntary decision to close, then that may be a different issue. So, but don't forget, no matter what your franchisor decides to do, if it does want to institute punitive action or even a termination procedure, it's got to go through the state law, and it's going to have to justify its decision to take some action against you when you were facing a crisis none of us has experienced before. One thing I will point out to you about franchise agreements is that some of you are getting franchise amendments or documents constituting amendments. That's as a result of the need of the franchisors to get franchise identifier codes so that groups of 500 or more employees can seek SBA loan, SBA loans under the CARES Act without consideration of the affiliation rules of the SBA. And so what those amendments are doing is bringing your dealer sales and service agreement in line with the commitments the franchisor has to make to the SBA to get a franchisor identifier code. It does not appear from any ones I've seen that the franchisors are trying to take advantage of this to improve their rights with you. But if you have any concerns, then you should talk with your attorney or a knowledgeable attorney who knows about franchise issues to review the document that may concern you. Can we have the next slide? Some practical advice. Sales are clearly way off. You need to analyze your inventories, get a feel for where you are. You need to make adjustments or stop orders, or reverse allocations you've taken. On parts inventories, now is probably the time, if you've got the ability to return parts, to do it and turn those into cash. One thing we're very concerned about is, just as you are working with reduced crews or using shifts to reduce people in your stores, the manufacturers are doing the same. We're concerned that they continue to process your warranty incentive claims. So you need to be tracking those carefully. You need to watch your open account carefully, because we're concerned about that they're taking action to be accurate in terms of what they're debiting and crediting to that account, because they may be working with people who are on reduced hours, and their mistakes are likely to happen. And then finally, the franchisors have been very forward-thinking in this. They've been communicating regularly with dealers on a number of issues. So we are suggesting that you watch franchisor communications carefully, as well as the communications from NADA and your state or local trade association, who have all been very proactive in making sure you're aware of actions that are being taken and the impact of that. Next slide, please. Let's talk a little about operation issues. In terms of your dealer license, if you're in a state which licenses the dealership or licenses salespeople, then you should be aware that if you make any changes if you have to close down your sales operation, for example, report that to the licensing agency so that they know what you're doing. If you're required to report your hours, Virginia dealers, for example, are required to maintain hours, and they report their hours to the Motor Vehicle Dealer Board. If you change your hours, make them aware that you've changed your hours. If you're in a state that licenses salespeople and you terminate salespeople, notify the licensing authority so that the state can process that termination. Next slide. Oops. Service and parts. Every service and parts operations are essential services under Department of Homeland Security guidelines. So every state or locality that's issued sheltering orders has agreed that service and parts operations are essential. There are differences in terms of sales, but dealers are working to keep as much of their sales operations open as they can. But at least as far as service and parts, those are essential. Now, one thing you are required under OSHA is to make sure you're ensuring safe work conditions. That means that you've really got to be careful in your service department to take special care on social distancing, to make sure that's being enforced in the dealership, enhanced sanitation to make sure that you're taking the steps necessary to clean often, so that you're watching enhanced sanitation guidelines. One thing you should be aware when you're considering layoffs or furloughs is that the Family First Coronavirus Response Act is now in effect, meaning there's going to be enhanced rights for Family and Medical Leave Act, especially for parents where the schools are closed. And so you may find your employees taking the opportunity to stay at home for childcare because they have to, because they simply can't find childcare or cost-effective childcare, And that may mean you will have difficulties having sufficient personnel in your essential operations if you go through layoffs or furloughs. So keep that in mind when you go about this, and don't forget that under the Family First CRA, you've got to post a poster about the rights of employees. So give attention to that. And make sure your poster is placed where you have other employee posters that are required by law. And then finally, consider on service and parts steps to limit customer interaction by picking up vehicles, increasing loaner use so that people are not in your waiting area. And if they are in your waiting area, enforcing social distancing and sanitation if you can do so. Next slide, please.
Mike, we actually had a question, if you don't mind, from the pool here. Some of the ADAs have advised the dealers not to utilize loaners as they may be putting the customers or employees at risk. They're also seeing some recommending more utilization. What are your thoughts?
Each of us is struggling with how we're going to deal with these individual issues. From my standpoint, I would rather have customers using loaners than have them in the waiting area of the dealership while they're waiting hours for their vehicle to be repaired. And so, but that does impose on the dealership enhanced obligations to sanitize a vehicle when it comes in from the last customer to the next customer. You're going to have to have people going in and taking special care in sanitizing that vehicle. Understood.
Additional question on this. With the enhanced FMLA, should the employee notify the dealership in writing?
Let me jump in on
answer that. Yeah.
The DOL just issued out additional regulations. There's no requirement that they must give it in writing, so they can give you oral disclosures. It's the obligation of the dealer to try and document as much as they can. But if the employee gives you notice orally, you're going to have to try to document it as best you can under the circumstances.
That means getting the customer. That means getting. If you can't get the employee to fill out a FMLA leave form, get them on the phone and give you the information that can go on an FMLA leave form, and note that the information was taken by phone.
Yep.
Next slide. General office issues. One question that's come up is, can the general office stay open when only parts and service are essential? And the answer we've come to is yes. I mean, it's essential for the general office to support parts and service operations. If they're not there to do the accounting work for the parts and service operations, you're not going to be in the parts and service business long. So it's essential to parts and service operations. Their functions are necessary to support any allowed sales operations, and even in states where sales have been stopped for visits to the showroom, there's still opportunities to do them online. In some states with shelter-in-place orders, there are appointment-only operations going on, so it's necessary there. Some attention should be given to the best way to handle the workload. You may want to consider shifts so that you limit the amount of the number of people who are in the general office. It may be, if people are taking advantage of leave, that you're going to have to do some cross-function operations with people doing more functions than they've been used to, but that's something that should be considered. And again, always, no matter what what department of the dealership you're into, you got to keep in mind social distancing and sanitation issues. Next slide. Sales and F&I. Needless to say, the impact of state orders on sales and F&I operations have been the overriding issue. The state dealer associations have been working hard to convince governors who are issuing orders regularly of the importance of sales and service and parts. Frankly, there are a number of reasons why sales are critical during this time, whether it's first responders and medical personnel in need of transportation, or simply allowing individuals to get around who do not want to violate the social distancing issues by using mass transportation. There are needs for sales operations, but we're suggesting where it's continuing, you really do need, whether it's been ordered or not, you need to limit the number of customers in your showroom. That's why you should be doing business by appointment only, and where you can, do phone and online sales. A question we regularly get is, does the FTC door-to-door sales rule, which imposes a 3-day cooling off period, apply to the sale of a motor vehicle? And generally, it's thought that it does not apply to the motor vehicle sales. And in fact, there is an exemption under the FTC Act, which says that if you do a sale from a temporary location, the door-to-door sales rule doesn't apply. But that's an auto show type of location. That's not a home. But there's another exemption to the door-to-door sales rule about phone and online sales. As long as those are conducted by phone or online, they're exempt from the FTC door-to-door sales rule, even if you ultimately wind up delivering the vehicle to the customer's home and having the paperwork signed at the customer's home. It's still going to be exempt from the FTC door-to-door sales rule. Now, in some states, there may be door-to-door sales acts that are more restrictive than the FTC rule, and you'll just have to consult an attorney as to whether they apply in your state. But for many states, it's the FTC sales door-to-door sales rule that's critical. And so we're suggesting that you use online capabilities as much as possible. Enhance your online capabilities. We've got some lenders now that are circulating amendments to the indirect dealer finance and indirect dealer lease agreements that will allow the entire deal to be signed electronically. We encourage you to look on those favorably and execute those so that as much as possible can be done online and by phone during this period. And next slide, please. Lenders and finance sources. One thing you need to do with your lenders is to make sure they're aware of what you're up to. Frankly, I think you're probably in contact with your bank representatives now, because each of you is probably working on obtaining a loan under the CARES Act with a financial institution. You're probably in contact with them, but if not, then make sure they know you're in business, it's ongoing, you've got a plan in place so that your lenders don't get nervous. Now, there may be programs coming out from your floor plan sources. You should pay careful attention to those. That will give you some relief, especially captive floor plan services, so you need to pay attention to those. One thing we're recommending is if you have equity in vehicles you can floor plan, you probably should floor plan them to the limit so that you can generate cash. We don't know how long this will last, and each of you, I'm sure, is acutely aware of the need to generate as much cash as you can. But we're going to warn you, please track carefully when you pay off sold vehicles. Pay them off within the time period allowed by your floor plan agreement. Do not go out of trust. Do not give your lenders an opportunity to get nervous about you. And what's going on out there now with the finance and lease deals from your franchisors, whether it's the latest GM deal or the latest Fiat Chrysler deal that I've seen, which are offering very, very attractive finance opportunities. Make sure your personnel understand those very well. Next slide, please. With that, I'm going to turn it over to Brad Weiss.
Okay, so I'm not going to go through all the different programs. What I want to talk about are there are a number of different statutes that have come into play. You have the Families First Corona Response Act. You have the Emergency Paid Sick Leave Act. You have the Emergency Family Medical Leave Expansion Act, unemployment and temporary pandemic unemployment. You have the CARES Act that has a variety of SBA loans and grants that are involved. There are lots of new statutes that are in place. The DOL, the Department of Labor, is issuing out regulations almost daily about how you're supposed to comply. The employees now have new rights that are coming out almost daily. It is really, really important that you do a couple things. One, you have to have the posters up. That's the first thing you have to do. You have to work with your controllers and your outside accountants to make sure that you're looking at the statutes so that you get the best possible loans, you get the best possible tax advantages, and you make sure that you're following the rules each and every day under these programs, because you're going to have employees that are going to be taking advantage of these programs, and you want to make sure you don't trip over any of the regulations. I literally looked at these just before we went on to this webinar, and employees can give you oral notice. You have situations where employees are going to be asking for paid sick leave because a doctor has told them they're not symptomatic, but they need to self-quarantine. And you're going to have to be dealing with someone who's going to be off for some period of time. You're going to want to be looking at whether or not you have telework with a salesperson. You're going to want to have some procedures set up in your dealership to deal with all of these events. Can we go to the next slide, please? So some of these programs overlap. You have to look at your controller and your outside accountants to figure out which programs best work for you. Some of the programs overlap and some of the programs are exclusive. So you want to make sure that you pick the best programs that give you the best bang for the buck. You want to make sure you have the notices up so you don't violate some of these DLL programs. You're sitting there saying to yourselves, who cares? But it's going to matter later on because you're going to have claims, administrative claims, you're going to have lawsuits that are going to be flying out the door. If someone's saying to you they have to self-quarantine and the doctor says there's a requirement for it, you can insist that that person telework. If they refuse to do it, there are consequences to that. You have issues with furloughs versus laid off or termination. You want to make sure that you understand those requirements. You want to determine if someone's taking advantage of the paid sick leave. You want to make sure that you keep the dealership operational now and after this pandemic is over with, and you want to minimize those lawsuits. Doing these things proactively now, making sure you have the rules in place, discussing it with your controller and with your outside accountants is really important. I know we're in an emergency situation and you want to just start cutting things, but if you do these things now, you're going to save yourself time and money now and later on. Next slide, please.
Brad had one question for you. Yep. Can the dealer require a note from the doctor advising of a quarantine?
You can ask for information, but I'll just tell you, I looked just before this. If they give you an oral information, the DOL is sort of all over the place on this. You're supposed to ask for documentation, but if they give you oral information, you're supposed to write it down and then follow up with documentation. I'm going to say this to you. You want to set up procedures at the dealership. If someone calls in and says they have a quarantine order from a doctor, you're going to have to take that information down and then follow up afterwards, but you're not going to blow the person out. You're not going to blow them off. You're going to take that information down and you're going to follow up afterwards, but you're going to have to give them the benefits they're asking for. Next slide.
Thank you.
So one of the things we want to start looking at is, so example today, we want to cut our contributions to a 401k. Before you start taking the actions, sit down and analyze it with your controller, your outside CPA. Do I want to do this? Is it cost effective to do it? Before you pull the trigger, analyze the decisions that you're making so that you can determine the cost benefit analysis. Some of these programs you get reimbursed for, some of them you can layer together. You want to make sure that you're doing the compliance now. Documentation now is going to save you money later on down the road, especially on a lot of these issues with the Department of Labor, these programs. Document it now. Even if you're getting oral information from the employees, you want to document it in some way in the dealership. Set up the programs now. A procedure inside the dealership will save you time and money later on. Thank you. Kim?
No. Thank you, Brad. So the big part of the CARES Act is, of course, the Paycheck Protection Program. Some of what you've been hearing, reading, discussing over the last week has really just changed as of yesterday evening from the SBA as they released their interim final rule. So the first thing is you want to be an eligible small business under 500 employees. One of the key eligibility requirements for these small business loans is that your businesses employ no more than 500 employees. In some of the cases on business groups with multiple dealerships, the SBA's affiliation rules require that all employees of these affiliate businesses count toward the 500 employee cap. So what the CARES Act did is it amended the SBA affiliation rules to exempt this issue, and I quote, "Any business concern operating as a franchise that is assigned a franchise identifier code by the SBA." As a real quick example, if your overall business of 15 dealerships is, say, Joe Smith Auto Organization, you have more than 500 employees, some other factors to consider, such as common control, you may be considered an affiliated business. So because they redefined the definitions with the franchises in the CARES Act, each of your legal operating entities now would technically be one franchise, like for each dealership, and you'll be eligible to apply for a loan if it's deemed appropriate. We were talking about the OEMs. The OEMs can obtain a franchise identified code from the SBA, and many of them already have. And keep in mind, you only need this code on these applications if you're over 500 employees. So please impart on your OEM, get the franchise identifier code for these SBA loans and applications. They're coming around right now. The 500 employee rule, it does include your full-time and your part-time employees. So keep that in mind when you're doing the eligible payroll calculation. So here's the loan calculation in all its glory. The loan calculation is based on your average monthly payroll costs times 2.5. So the way the CARES Act works, it wants you to calculate your average monthly payroll costs. And this is based off yesterday's guidance. It's changed from the last couple of days, so it may be different from what you've heard or seen. And here's where all the fun math comes in. It's based on the most recent 12-month rolling average of gross payroll costs. Within this calculation, any employee annually making over $100,000 is capped at that amount for purposes of the calculation. Payroll includes wages, bonuses, commissions, vacation pay, sick time, but not the federally mandated sick time that's being discussed now. If your payroll is all done through W-2s, which we're going to assume is the case for most of the dealers watching this webinar now, as of last night, they changed the guidance, and independent contractors whom you issue 1099 miscellaneous forms to should be removed from these calculations. The CARES Act was really vague on this point, and this was clarified. Independent contractors, other self-employed people, they'll be able to file for their own loans and assistance. So now to this equation, you add the employer portion of your group health benefits, the employer match on your retirement plans, your 401ks, and your portion, you as the employer, of state and local unemployment taxes. A lot. You take this 12-month calculation, you divide it by 12, which creates your monthly average. Then you multiply it by 2.5 to get the potential loan amount, which can't exceed $10 million per loan. And if you happen to have it's real recent, a recently obtained economic injury disaster loan. You want to add that amount to this total also, because that'll be put into your small business loan. Again, there's a lot in this. We'd be happy to share a template with you that we have upon request.
Scott, I had a question for you.
Yes.
When filling out the applications for the payroll protection program loans, some of the instructions are unclear. In specific, when it's asking for the payroll costs, should it be the employee or employer portion of the state and local taxes, health insurance, and retirement reported?
It's all employer. Employees don't contribute for the most part. It may vary a little bit state by state on the unemployment taxes. The state unemployment taxes, that's not an employee cost. It's a cost of the employer. And it's only the health insurance that you as the employer expense that you pay for on your employee's behalf. Like a lot of dealers do like single pay or something similar to that. And that's the number that goes into the calculation. Same thing with the 401k match. It's always the employer. There's no FICA taxes or any other taxes that go into this calculation.
Understood. Second question for you. Is there any guideline in regards to union dues paid by the employer? Are they to be included in the calculation for the loan?
I haven't seen any guidance, but I would assume no, because again, it's not a wage. It's really just a dues that that the employee pays. The employer takes, withholds it on their behalf. So we haven't seen any guidance on that. It doesn't.
That is an earned amount that's being held back to be paid, though, Scott. I mean, I don't know the answer either, but it is a wage to the employee from the employer, part of which is being deducted and paid over to the union.
Well, again, there's no, like you said, Mike, there's no guidance. We haven't seen anything yet. So we'll have to get back with you. We just don't know that yet.
Okay, we'll keep an eye on it. All right,
Yes.
thank you. Ready for the next slide?
No,
Oh,
I'll go back. I'm sorry. Okay. So you want to work with your lenders to get your application submitted as soon as possible. Today's the first day. It's challenging. The application, it's called the SBA 2483 that was mentioned. It's called the Paycheck Protection Program Application Form. It's been streamlined down to 2 pages, and it needs legal information on your entity, such as your name and the EIN number, the payroll calculation we were just talking about, notating what you're going to use the loan proceeds for, such as payroll. There's 8 questions you need to answer yes or no, and you need to certify the use of the loans. Every lender is going to have their own set of documents, their own set of rules, so you want to ensure you're working closely with them on what you need for submission. Some require just this 2-page document, some require a lot more information. And the interest rate yesterday was changed on the loan. It was 0.5%. It's now fixed at 1%. Originally, the discussion, it was 4%. And again, yesterday was 0.5. It's listed in the interim guidance. As far on the interest payments, they're all deferred for 6 months from the time of the loan, and they accrue, but they're subject to forgiveness if the loans are used for their intent and are well documented. Key is documentation on how you're using the loans. They'll have a maturity level of 2 years if it's not all forgiven. And they don't require any collateral or personal guarantees, which is really big. Next slide, please.
Scott, we have one more question pertaining to this loan program. In the event that the dealership has a situation where their bank is not an SBA approved lender, or that the lender in choice only wants to work with businesses that is one of their current borrowers. Have you heard of these situations, and do you have any suggestions on where these people can turn?
I've heard that as well. It's very anecdotal. I've seen a lot of stuff today via email and talking to clients. That's happened. It really does seem like the lenders are dealing with, the lenders that do decide they're going to participate are dealing with their current customers right now, because they don't really have that much risk. They know the client. There's been really little chance of fraud. From a standpoint, just overall, last night, the Treasury Secretary Munchin, he said He said it's going to go live on Friday, this being the PP loan, even though some lenders weren't ready. And again, this is from last night's press conference. He said if the program runs out of funds, they're going to go back for more money to support small businesses. So that's all we kind of know at this point.
Scott, if I could interrupt you, it is not only SBA approved banks. Under the CARES Act, it was extended to all FDIC institutions. So if it's a bank that's savings or loan, credit, whatever it is covered by the FDIC, it may participate in these loans. And so that's why you're seeing a lot of the banks today having difficulties with this, because this is an influx of loans they haven't been used to, because they may not have typically been involved in it, but they're permitted to be involved in it because they're with they're FDIC insured. And so if you're a dealer with a bank relationship, that's the key, and they're all FDIC insured. So they may need to have more discussion. You may need to have more discussion with them to be more accommodating of your needs.
Bank of America was giving preference this morning to those customers who had a commercial relationship and a depository relationship, and they were getting flack for it this afternoon. As of 2 minutes ago, Bank of America had 58,000 applications and supposedly committed $9 billion between 9 a.m. and 2:23 this afternoon.
Yeah, from what we understand as well from today with Bank of America, their application process, the app to use to start filling the stuff in it electronically, it failed. It just crashed with the sheer volume, just like you said, Brad.
But the key thing is it's not limited to SBA approved banks. It is much broader under the CARES Act.
Next slide, Tara, please. So the allowed use of the loan proceeds would be the payroll costs. We just went through all that. Rent on valid lease agreements that were signed before February 15th of this year. Interest on pre-existing mortgage obligations existed before February 15th. And of course, utilities. These are the only obligations that can be used in determining the loan, and we're talking the forgiveness amounts. The next slide. So loan forgiveness, it's going to be calculated in the 8-week period following the loan origination date, not the date when you get the money on the loan. I just had that question right before this webinar went on. It's the loan origination date. The loan forgiveness could possibly be reduced from the following type scenarios. If you decrease your number of full-time employees, there are formulas to determine how many employees you have and how to calculate the FTEs, the full-time employees. We can send those as well if requested. If you decrease your wages by over 25% for any one employee who previously made less than the $100,000 annual salary in the cap for the payroll formula. And this was, this actually hit the guidance last night. The SBA notes 75% of the borrowed funds must be used for the payroll related costs. Otherwise, there's a reduction in the forgiveness amounts. And the payroll costs are, defined how I just discussed in the average monthly payroll calculation. I'll turn it over to Kim.
Okay, folks, we're going to discuss the WARN Act. And this is the Worker Adjustment and Retraining Notification Act. And anytime a qualifying business under the WARN Act has to contemplate a shutdown or mass termination or mass layoffs, this is where this federal statute gets implicated. And we're advising dealers that as they're going through this process to talk to their auto dealer counsel or some other knowledgeable counsel on this, because it's a very nuanced statute. And in addition, some states have their own mini WARN Act statutes that are also implicated. Tara, can you go to the next slide? So like any legal requirement, the WARN Act is very technical. It's very nuanced. And so you want to make sure you're careful about it. So the WARN Act covers dealers that have 100 or more, any business, but in your case particular, dealers with 100 or more full-time employees who combined their regular work hours total 4,000, not including overtime. Part-time employees are considered those that work 20 hours a week or have been employed for fewer than 6 to 12 of those months. And a dealer operating multiple dealerships, even if it's owned under separate corporations or business entities, where they have a total combined full-time employee count of 100 or more, they should consider themselves a covered employer under the WARN Act, just so that they're making sure they're not stepping over themselves when they make these hard decisions. Tara, can you move to the next slide? So the WARN Act requires 60 days notice anytime there's a plant closing or large-scale mass layoff or termination. And that can also include anytime you have to do some sort of reduction in work hours. And again, that really is dependent on how large scale that is. So that's why you want to make sure you're consulting counsel when you're making these decisions. So it covers any temporary or permanent shutdown of one or more facilities at a single employment site, and we'll talk about that in a minute, that causes a loss of employment for 50 or more employees, excluding part-time employees, so full-time employees. And that employment loss has to last over a 30-day period. That's considered a plant closing. A reduction in force that is not the result of a plant closing that lasts over a 30-day period for at least 33% of the workforce, but at a minimum 50 employees at a single site is considered a mass layoff. So a WARN Act notice may be triggered if a dealer has to close one or more of its stores, if it has to lay off or terminate employees at one or multiple stores, if by doing that it amounts to 50 or more full-time employees suffering that employment loss at a single site. Just because this is very technical, there are nuances to what is considered a single site. And for a dealer's purpose, anytime you have a dealer that's has contiguous locations, even if you have a store across the street, or if you're a part of an auto park and you have multiple stores in that auto park, that could be considered a single site of employment. So we really want dealers to be cautious of that and not necessarily assume that you might have different stores, different buildings, and therefore you can get away with some of these nuances. You want to make sure you're being careful. Next slide, Tara. So there are certain exceptions in the WARN Act that give an employer a little room on the 60 days notice requirement. For example, dealers can give less than 60 days when there's an unforeseeable business circumstance, or they're actively seeking new business or capital, and they believe that by giving the 60-day notice, it would prevent them from obtaining that new business or capital. They can then give less than 60 days notice. This is really a situation where dealers in this particular pandemic situation are probably going to fall under the unforeseeable business circumstance. Either way, you have to give some amount of notice, even if it's less than 60 days, which clearly in these times, no dealer can give 60 days notice. The key is giving some amount of notice. What that amount of notice is really going to be dependent on the circumstances of each particular dealer. The only situation where a dealer can get away with giving 0 notice is a natural disaster, and the regulations are pretty clear about what that is: flood, earthquakes, tsunamis, hurricanes, tornadoes. And although this pandemic might feel like something analogous to a natural disaster, it's really not. And so this is really going to be a situation where it falls under unforeseeable business circumstances. And there's case law out there that even where a shutdown or a mass layoff or termination is the result of some government action, government required action, that still requires a WARN Act. So you still want to make sure that you are consulting with your counsel. Next slide. Okay, so what has to be in the notice for it to be a compliant notice? Well, there's certain information that has to be included. You have to include the name and address of the employment site being shut down or where there's going to be a mass layoff or termination. You have to, if it's the entire location that's being closed, the entire plant, the notice has to state that. And if it's going to be permanent or temporary, you have to identify that as well. If there's termination or layoffs that are going to be done in phases or in waves, you need to make sure you explain that as well and identify the dates or the time periods when you're going to have the first separation followed by the next one. And on this particular issue, this is where you really need to make sure you're consulting with someone about this, because there are 30-day and 90-day look-back periods that you can do to make sure that you're not running afoul of this, especially when you're trying to phase layoffs and terminations. Next slide. In addition to the other points that have to be in the notice, you have to also identify the job titles and positions, as well as the names of the employees that hold those positions that are going to be affected by the termination or the shutdown. You have to identify the name and a telephone number of a company official that they can contact if they have questions or need further information. And then, especially in this particular circumstance where you are most likely not going to be able to give 60 days notice, what is key here is that you have to be able to give a brief statement that explains the business circumstances that are the reason for the reduced notification time period. And that's fairly easy. I mean, the pandemic, the fact that there are different state versions of a shutdown, a stay-at-home order that have obviously affected business and business operations. And as a result, that was, within the last couple of maybe 2 weeks. So clearly you're well within 60 days and not giving the 60 days. So that's sufficient explanation, but you want to be able to explain that. And that's key, because if you don't, it's an insufficient notice under the unforeseeable business circumstances or faltering company exceptions. And then you want to make sure that you're delivering the notice by mail or hand delivery, which in today's social distancing, you're not going to be able to do hand delivery. So you're going to want to make sure you do it by mail, but I'm also advising dealers to do it by email, especially because you have a lot of people that are at home right now and aren't coming into the dealership. And, even though it's super technical about what has to be in the notice, minor or inadvertent errors are not going to be fatal under the WARN Act. You just want to make sure that you're giving as much information that is required on that list. Next slide, Tara, please. Okay, so there's some specific considerations that dealers operating multiple stores should be aware of. So, for example, if you have multiple locations and you're going to be doing terminations or layoffs that are going to be a few employees here at one location and another group of employees at another location, you may or may not have to give a WARN Act notice, depending if in the aggregate it's going to be 50 or more, especially if you fall within some of those single site employment examples I gave you, where you have contiguous buildings, or whether you're part of an auto park and you have multiple franchises and multiple dealerships right there, whether you share certain staff and employees. That's, you know, these are some of those considerations that you're going to have to take into consideration that will likely mean that you're covered, a covered employer, excuse me, under the WARN Act, and that you should be following these steps and err on the side of caution. Thank you.
Let me just add 2 points to what Kim just said. So why does it matter under the WARN Act? Well, there's 2 reasons. If you don't give the WARN Act notice and you're required to do it, then at some point you could get a lawsuit for all those employees that get to sue you for 60 days of wages and benefits. And you may say to yourself, who cares? Well, whether you're in bankruptcy or not, you get sued for those 60 days back of benefits and wages plus attorney's fees, whether you're in bankruptcy or not in bankruptcy. What's the benefit to it? If you get to give the notice, that is a protection against, arguably, a lawsuit that you've given that notice, and that's a defense to that claim of that 60 days of back wages and benefits. So again, as I said earlier, part of the planning is if you're going to be in that situation where you're going to be laying off employees in multiple waves, again, you want to sit down with your controller, your outside legal counsel, as well as your tax personnel, to sort of anticipate, I know it's emergency circumstances, to figure out how best to protect yourself if you're going to be doing it in waves and you're going to hit more than 50 employees at some point, because you may want to give that notice. If it's necessary, it's going to provide you some protection.
And just to pick up on what you just said, Brad, another reason, even though the urgency of the situation, you want to sit down and actually make sure you're planning this correctly, is to make sure that you're not impacting some of these payroll projections that will then somehow have a consequence to these loan programs and forgiveness criteria.
We had a couple of questions relating to this, and some even backing up into Scott's. So I'll go ahead and get them started here. If a dealership's already cut hours and salaries back 25% deduction for all employees, is that penalizing them under the loan forgiveness program, or is that if you deduct that if you have the deduction after the loan?
It's going to reduce. I mean, it's going to reduce the amount of loan forgiveness because it's looking at like almost $1 for dollar. And again, how many employees you had prior to this, and how many employees you had, and how many employees you have now. So there's definitely going to be a reduction in the loan forgiveness.
Okay. If an employee decides to self-quarantine due to not feeling comfortable being in public, and they're able to provide a doctor's note advising them to stay home, do you have a right to officially lay them off, or are you obligated to rehire them after the coronavirus situation is over? Also, additional question, in this case, would the employee be eligible to file for unemployment?
So let me go back for that. So if an employee is required to self-quarantine, you have to honor that. You can, if they're not too ill, you can require them, you can engage with them, it's called the interactive process, to telework, depending on what their job duties are. So that's why you want to sit down now and put together plans for teleworking for those positions that you can do it. You can insist on teleworking if it's possible. You can set up plans for different hours for people to work by telework. You can lay off employees but you can't do it while they're out on the sick leave. You could terminate them afterwards. You have to be careful about that because there's still rules under the DOL for retaliation. So you have to be careful of the traditional retaliation rules that still apply, and they put that in the regulations. So if someone's told they're self-quarantined, they can't just make it up themselves. You're entitled to ask for a doctor's note for it. But if they're telling you orally, you're probably going to have to take that and then follow up for some documentation afterwards. If I've answered your question, if there's a follow-up to that.
I don't see one at this time, so go ahead and proceed.
Was there another question?
No, I think Scott's ready. I think we're ready to go to Scott for the tax issue.
All right, so the CARES Act has had a fair amount of tax-related items that went in there. Some of them had to do with payroll, some of them had to do with changes in some of the tax laws that were just passed recently. So the first thing is the employee retention credit for employers. It's a credit, it's equal to 50% of qualified wages of your employees, but it can't exceed $10,000 per employee. And it's basically limited to your portion, you as the employer portion of the Social Security taxes. So like the 6.2% of the $10,000 is basically going to be a credit against your other payroll taxes. Not that much, in my opinion. If you do get a PPP loan, it disqualifies you from taking this. Next slide. You can also delay your payment on the payroll taxes. So what you can do, and again, if the PPP loan disqualifies you from doing this, if you do take one out, the employer portion of the Social Security taxes from your overall payroll tax payments wouldn't be due until 1/1/21. So we're talking less than a year, but 50% would be owed on 12/31/21. So it's over a year and a half deferral, a little more. And the other half would not be owed until 12/31/22. So it's a pretty long lag in when you actually have to make the payments for the FICA taxes. The next slide. So the NOLs, so modifications on these net operating losses. What happened last year was that the tax jobs and CARE Act, the TCJA of last year that came out, it basically limited net operating losses on individuals and C corporations to 80%. The act now added a 5-year carryback period for both corporate and individual. So again, it temporarily repealed this 80% limitation for NOLs that occurred in 18 and going forward. So you can apply for tax refunds on amended returns if it's applicable. So just to kind of give you an example, on an individual tax return, you had an operating loss in 2018, and again, you're limited to 80% of this net operating loss for purposes of determining your tax. You could recalculate it to 100% of the NOL, and any differences in that reduction, any differences in the reduction of that tax, you may be able to get refunded. And just kind of using the caveat we see everywhere else, your circumstances may differ, so please check with your tax advisors, because again, it may not match your particular situation and fact pattern.
Scott, can you get the NOL with the PPP program?
Yeah, this is a completely different thing. This is more on the individual level. The NOL that was caused by your combination of like your business, if you have K1s and such, as well as your just regular income, if you have a net operating loss. I didn't see anything regarding that because they're completely different things. Next slide. All right, so as well, again, the Tax Cuts Jobs Act, what they did is they created a limitation on, again, your individual tax returns and all those business losses that occurred, that all business losses were, used to be fully deductible. Business losses, you get K1, you get losses from your K1s, things like that nature. It limited the losses you could actually take. You take your losses to zero, and then another $250,000 if you're single, and $500,000 if you're joint, married filing joint. Whatever the losses were, they got carried over to 19, to use in 19. So the act eliminated these caps, and now you can deduct in the year of loss. So what it's basically saying is if you had like, you're married filing joint and you had a $600,000 business income limitation that filtered onto your personal tax return, you can go back and amend for that $100,000 differential to get some tax back. So you can amend your 18 returns, but again, you know, check with your tax advisors because your situation may be a little different. Next slide. Okay, so the Jobs Act also created a general limitation on business interest expense, which was capped at 30% of adjusted taxable income. This was part of the act. Now, going forward, it was increased to help out in the CARES Act. They increased this to 50% of your adjusted taxable income for 2019. So again, you can adjust or amend your 19 business returns if they haven't been filed yet. What I see useful in this thing, not only for possibly increasing your taxable deductions for 19 on your dealership returns, whether again it's an amended return if 19's been filed, or if it's been extended and hasn't been filed yet, it's just going to go on your 19 return. It can be used in conjunction with another provision of the Tax Act from 2 years ago. If the amount of your allowed interest expense is now 50% of your adjusted taxable income, and you can treat your floor plan interest, which was a carve out against regular interest as part of the act, if you can now take the floor plan interest with the increased number to 50% of your adjusted taxable income, if you can treat your floor plan interest now as regular interest, pure deduction, you're now eligible to take 100% bonus depreciation on your fixed asset additions, which you didn't have before. And that could decrease your federal taxable income significantly if you had a lot of additions in 2019. The states may or not follow bonus depreciation. I know New York, New Jersey, Virginia, they don't follow bonus. So again, just check with your tax advisors on that. But those two together, it's a really good thing if you can do it. Next slide. And finally, there were some technical amendments regarding qualified improvement property or QIP. So again, going back to the Tax Jobs Act, there was an inadvertent technical drafting error. It left this off 15-year property. It was deemed 39-year depreciable property, was not eligible for bonus depreciation, and that was not the intent. And that basically was not the intent. It was a omission in the law, in the Tax Act. And QIP could comprise significant amounts of dealerships in the remodels and the upgrades in your showroom, for example, when the factories are saying, hey, you have to do an upgrade. A lot of that stuff is 15-year within the showroom. And now it's fixed. It's taken a while, but it's fixed now. It's 15-year property, and bonus depreciation is now allowed. And there's no definitive guidance yet. I've been looking for this. It's a week old. There's no definitive guidance yet on whether you should amend your 18 returns or do a change in accounting method of Form 3115 in 2019 on your corporate tax return or 2020. There's just not the guidance yet, but I'm sure it's forthcoming. And just to kind of to finalize on the next slide, please. Basically just a tax extension update. As of April 2nd to yesterday, the only states that are not following the July 15th individual federal tax extension dates are Idaho, it's June 15th. This is on personally. Mississippi is May 15th, and Virginia is still May 1st, but you don't actually have to pay until June 1st to make the payments, but you're still subject to accrued late interest. So I don't know what's going on in Mike and Brad's and Kim's state, but it's what's going on. That's going on with the interest. And there's no official update yet on changing the second quarter, the estimated federal tax payment for the second quarter of 20, which is due on June 15th. They've extended the first quarter until July 15th, but they have not mentioned the second quarter yet. Next slide.
At this point, do we have any questions from the group for any of the presenters today? Just to update everyone as well, this session is recorded and I would be happy to share it with everyone that's been on as well as we'll post it on social media and onto the Rosenfield website as well. Any other last comments from the presenters?
Thank you for everybody's time and attention. And Tara, thank you so much for hosting this webinar.
Of course.
Thanks.
Yes, thank you, Tara.
Of course. I don't see any questions coming in right now, so I'm going to go ahead and close up for all. And I will go ahead and issue out the recording as well.
Thank you.
All right. Thank you very much.
Thank you.